Hello all and welcome again in the series of lectures of financial accounting and analysis, and I, Dr. Shikha Jalota, welcome you all again for this section. So in the previous session, we have talked about the journal, we have talked about the ledgers. I told you how the ledger accounts will be prepared and how the posting will be done, and we have taken up the question also, journal entries we have already prepared for the question, and we have taken up certain entries for the posting also. So we will continue with the same question. So let us take up the question here again to complete it for the ledger postings also. Okay, so this is the question that we were doing, and I remember we have done up till 8th January entry. So we will continue further with the journal postings here, sorry, ledger postings here. So we will take up January 12th entry, Rahim account debited to sales account. Since sales account we have not prepared yet, and Rahim account also is a new account appearing for the first time in the journal entry. So we will take up these two new accounts. We'll prepare Rahim and sales account. So let's take up the ledger accounts, Rahim account and sales account. Now you can see here sales account and Rahim account. Now Rahim account entry is Rahim account debited to sales account. So Rahim account is debited. We'll go on the debit side of the Rahim account. January 12, you can see here written to sales account 600, and on the sales account you can see sales is a credit entry. So we go on this credit side of the sales account under 21st, under 12th January. It's a wrong date mentioned here. On the 12th January, you can see Rahim account is appearing under sales account on the credit side with 600 amount. Then we'll go back to the next entry. It is next entry is cash account debited, bad debts account debited to Rahim account. So for this entry, cash account we already have, Rahim account we already have, bad debts account is the new account which we need to prepare here. So let's take up the cash account entry. Cash is getting debited here. So we'll go on the cash account debit side, and you can very well see here under 15th of January to Rahim 300 is getting debited. So cash account posting is done with the name of to Rahim, and we'll go to Rahim account. As you can see here, Rahim account is, here is the Rahim account. Now Rahim account is getting credited. So credited with 600 rupees in the journal entry. So what we are doing here, see Rahim account on the credit side, as we have done in the previous entries also, that if two account the amount with which that particular account is getting debited or credited has to be appearing in the same way in ledger account also. Like Rahim account is getting credited with 600 rupees in the journal entry, so for Rahim there has to be 600 rupees credit entry in the ledger account also. But this 600 is coming from two accounts. One is cash and other is bad debts. So we have to enter both the accounts here. So the final entry here for Rahim account ledger credit side is buy cash 300 and buy bad debts 300. So now you can see here Rahim account debit side is also having 600, credit side is also having 600. So his account is closed now. There is no further balance existing in his account. The debit and the credit side total is the same. So this account is closed. Now one more account which is there in this entry and a new account, that is bad debt account. So bad debt account we have to prepare, and bad debt account is getting debited in this entry. So we'll go on the debit side of the bad debt account to Rahim 300 rupees. Done. Then we will come to the next journal entry, that is okay. Next journal entry is cash account debited to sales account. So cash account debited to sales account, we have both the accounts here. Just we'll post the entry. Cash account is getting debited with sales. So cash account debit side to sales account 1000 rupees, and we'll go to the sales account. as it is, you can say in this page. No, it is on the next page. Sales account, you can see. So under, this is the entry of 18th January. So we can see 18th January on the credit side, buy cash account 1000 rupees. So this is the posting of this particular journal entry for sales. And then we'll move on to the next entry. That is, okay, entry of 20th January, salary account debited to cash account. Cash account we already have, salary we have to prepare. So cash account is getting credited. So we'll go on the credit side of the cash account. See, you can see under 20th January, there is an entry of buy salary account 2000. And then we'll go to salary account. It will be at the end because it's a new account. So salary account, you can see here, salary account is getting debited. So we'll go on the debit side of the salary account to cash account 2000 rupees. Done. Then next journal entry is see, Anand account debited to cash to discount. So we have all the three accounts because Anand, as far as I remember, it is the creditor balance which is got forwarded from the previous year. So Anand account is getting debited. So we will go to Anand account and we will debit it. Now we can see here in Anand's account on 1st January, we have made a transfer entry of 5000 rupees. Then on the debit side, since this is the entry for the settlement of Anand's account, which is for the payment. So on 21st of January, Anand is being paid with cash. So to cash 4800 and to discount 200. Now see, debit and credit balance of this account total got same. So this means that this account is closed now. Now we'll go to cash account and discount account. So discount account we already have, we have prepared. Let's take up the cash account here first. For 21st January, see, cash account is getting credited. So 21st January, cash account is getting credited under the name of Anand, being paid 4800 rupees. And then we'll go to the discount account. As you can see here, the discount account on the 21st January by Anand 200 rupees. Done. Then the next journal entry is cash account debited to interest and interest on loan to cash. So interest in one entry, interest is debited with 200, credited with 200, and in the other entry, the interest is getting debited with 500. So let's take up the interest account. Now, in this situation, there can be two solutions for this. One is in this question, as it has been solved here, is see, you can see here interest account. One is the interest account, other is interest on loan account. So otherwise also you can prepare one interest account and accordingly you can show the interest amount. But in this question, they have taken up two accounts. Both ways the solution is right. It is dependent upon your taking up of the question that how you want to take it. But both the solutions are right. If you prepare one interest account and you can put in the debit and the credit, both items here also, like interest what you have received and the interest what you have paid, you can put it under the same account also. But if you want to prepare a separate account for that, you can prepare it separately also. So one interest entry is cash account debited to interest account. So cash account debited with 200 rupees. So cash account debited with 200 rupees here in to interest account. And then in the other entry, cash account is getting credited by interest on loan account with 500. So on 28th January, it is 500. You can see on the credit side. Then coming to interest account is getting credited with 200. So you can see here interest account for 26th January is getting credited by cash 200. And then in the next interest on loan account, you can see it is getting debited with to cash account 500. So if you prepare one interest account, that is also fine. That is totally dependent upon your choice. Then cash account to sales, you can put in the same entry as we have done in the previous transaction also. Cash account is debited with sales 500 and sales account will be credited with by cash 500. And last is this drawings to purchases account. Drawings account is the new account that you need to prepare. So drawing account will be prepared and purchases account we have already prepared. So let's take up the purchase account first. Purchase account is getting credited here. So for this, you have to make a credit entry in the purchase account. See, purchase account is getting credited for 31st January by drawings account 200. And in the drawings account, at the end, you can see the drawings account, it is getting debited with to purchases account. So with this, we are done with the posting of all the transactions that we have recorded under the journal entries. We are done with all the postings in the transactions. So let us take up the final phase of ledger accounts in the next lecture. For now, you can simply go through with the ledger accounts that how we have done the posting again, so that it will be more clear to you. And once you are clear with your postings, that how the journal entries will be posted in the ledger accounts, then we'll proceed further with the how to balance the ledger account and preparing the trial balance for it. So for now, you just revise whatever we have done under the posting in the ledger accounts, and we'll beat up again in the next session. Thank you all.